Hello again, fellow BeachBum traders. Thank you for joining us for part 2 of our weekly trading game plan for the first trading week of 2024, January 1st through January 5th of 2024, where we'll be selecting and talking about our top swing trading stocks to watch, stocks in our bullpen, our shopping list, how to build out our shopping list. We'll also talk about how to generate additional income using dividend payers and a variety of option strategies. So let's get started. Welcome, Brian Moritz. Thank you for joining us in the live chat, and happy New Year's Eve day to you and all of our fellow BeachBum traders out there. So here's our Google document with our notes for part 2 of our weekly trading game plan for the trading week of January 1st through January 5th of 2024. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes contain links to bonus video, tools, and resources we use to select our top swing trading stocks, etc., access our bullpen, our dividend payers, etc. If you haven't already seen part 1 of our weekly trading game plan for this week, titled Make More Money Trading in 2024, we'd highly recommend you also view part 1, as that contains our market analysis, our trading strategies, trade ideas to hopefully help you make more money trading in 2024. So again, we'd highly recommend you also view part 1, as that provides all the input data that we use to select our top swing trading stocks to watch for this week. We keep all of our notes documents for our weekly trading game plans in a publicly accessible Google Drive folder, so you can refer back to the notes for part 1 from this week as well as previous weeks, and you can find a direct link to that Google Drive folder also in the description box below. Welcome to Ricky Khan. Thank you for joining us today. Hope you're doing well. So first, we'll quickly talk about a couple of our trade updates for this week, and then we'll go look at the charts for these trades in Weeble. The first trade is a long-term swing trade we've had on BLOK. BLOK is an ETF focused on blockchain. We were kind of using that in the past to trade blockchain cryptocurrency technology. You see, we entered that trade in April of 22 at 30. So we've held that through, as you'll see, a long-term swing. We finally exited profitably on December 29th at 31.20 for a profit with an ROI of about 4%, which equates to a monthly profit of about 0.2% on price appreciation. So congratulations to all of our fellow BeachBum traders who profited from this long-term swing trade on BLOK. We talked yesterday, and we'll see this in the chart, that cryptocurrency had Bitcoin had been having a nice run. Part of it, speculation on spot ETFs getting approved, and then some news came out that a number of the miners had dumped a large volume of Bitcoin, and you'll see a rejection of BLOK off a resistance level and downturned. So we took our profit rather than have to wait for it to swing back up. And we've talked in the past that there may be better ETFs that we've identified since then rather than BLOK. Welcome, Easy Mike. Thank you for joining us. Sydney Osborne, thank you for joining us as well. Hope you all are doing well. So our second trade for this week is USOI. Again, USOI is a monthly dividend paying ETN on oil. So as oil had had come down below 70 and then swung back up. So we entered this trade on the 6th of December at 69.32. So oil got rejected off that 75 level, bounced down, it's trending down maybe to 70 again or below. So we got stopped out of that on the 28th at 70.96 for a nice profit with about a ROI of 2.4% or a monthly ROI of about 3.2% on price appreciation. And we also collected the 76 cent per share dividend for monthly. And as you'll see, we're looking, and we talked yesterday, we'll be seeing if oil does dip below 70, and then we would jump back into USOI and rinse and repeat. Again, this is the one we like to swing for oil, so we can collect that nice, juicy monthly dividend while we wait for oil to swing back up. So congratulations to all of our fellow BeachBum traders who also profited on this scalper swing trade in USOI. So in a second, we'll jump over to Weeble and look at the charts for those trades. Just a quick reminder, if you would like to get real-time alerts, email notifications, as well as alerts in our Discord when we enter or exit a trade, you can get that information by joining any level of our Patreon. Again, I don't recommend anyone blindly follow us into or out of trades, but if it would help you make money, trading, help you succeed in your trading career, to see our entries and exits from trades as quickly as possible, I post our trades to our Patreon members. They get email notifications, and then also I'll show you a couple channels in our Discord where we have a variety of alerts available to our Patreons. So firstly, under the alerts category in our Discord, I have a Thinkorswim toss alerts channel, and I have price alerts set up in Thinkorswim. When those get triggered, they automatically post to this Thinkorswim channel, so you can see when the price alert for my stop on BLOK got triggered. If we follow that up with a trade, then I'll reply to that in the Thinkorswim channel. If it's a trade not directly related to a Thinkorswim price alert, then I'd post that in the trade alerts channel in our Discord. And again, you can get access to all of these alerts channels, well, those channels via joining any level of our Patreon. So, okay, let's look at those trades quickly in Weeble. So firstly, here's that BLOK trade. Again, it was a long-term swing. You can see we got in to BLOK around 4/6 of 2022. So you can see when it dipped down to that support level, we were hoping that it was going to swing back up to this high, 56 high. Since cryptocurrency has broken down, we've been in a crypto winter for, a year and a half or so. And then we finally got that swing back up, and then we see it rejected off that resistance level and turned back down, and that stopped us out at that point. So again, long-term swing. Again, patience pays, as I've always said, and we expected eventually cryptocurrency, blockchain would turn back around, as it did, but we got that rejection, and we didn't want to go through another swing like this. And again, there may be better alternatives for trading Bitcoin and some of the other cryptocurrencies going forward. Our USOI trade, again, shorter term, so I'll zoom this in. So we got in on the 6th when oil broke down below 70. I didn't quite get the cheapest price. As you can see, it got a little bit cheaper. But again, we were just waiting for then oil to bounce off that 70, head back up, which it did. And then it hit that resistance level, turned back down. When it broke below that pivot point, we got stopped out. I was kind of hoping maybe we'd get a further upturn, but again, we see oil's currently downtrending, got rejected off that 75. Again, we'll see if oil breaks down below 70, and if so, we'll be looking for a bottom to swing USOI back up. So, and again, collect the monthly dividends while we wait for oil to swing back up. I don't expect oil to collapse much below 70. There's a lot of support with refilling the SPR, as well as the conflicts in the Gulf region, etc. So a lot of potential catalysts. We'll just look for an opportunity to enter USOI again. So let me grab a quick drink and we'll go over our top swing trading stocks to watch list for this week. Welcome, Ellen Krentz. Thank you for joining us. Hope you're doing well. Okay, so here's our top swing trading stocks to watch list for this week. I'll just go over what we've got in there, and then we'll jump over to the charts and look at them again in Weeble. Land is a farmland REIT that we've had on our watch list, profitably swung that numerous times. Again, recently we saw REITs got a little bit of a downward pressure, sector rotation out of REITs on Friday. We'll look for opportunity to re-enter land. Yesterday, we looked at the technology component screeners. We saw a number of the technology components, have hit recent highs, if not all-time highs. One of those is ARK-K. We saw it hit a new high, and then the majority of those components got rejected on Friday. So we're potentially seeing that sector rotation out of technology. We talked about that as a potential opportunity going into 2024. So we've got several of those technology component sectors looking for a short. So SARK is the short on ARK-K. Again, if any of our fellow BeachBum traders caught that rollover on Friday, there was pretty significant rollover on Friday. So if you're a nimble trader, you might have already caught that. There's opportunities to trade the momentum back down or catch again another rejection off an all-time high. Again, we're looking at ARK-K tops and resistance, rejection from resistance in ARK-K to determine our entry points in these inverse ETFs like SARK. One I added to our bullpen this week and then moved it up into our top swing trading stocks to watch list is SIJ. SIJ is a short on industrials, on the industrial sector. We looked at this ETF yesterday in our ETF Google sheet and talked about that XLIs hitting new highs, and we're again looking for a top or resistance, rejection from a resistance in XLI. If we see that rotation out of industrials, we would trade that with a short using SIJ. Again, another technology sector was semiconductors. Semiconductors had an exuberant run. Again, I've had this on the watch list for a couple weeks, but I didn't really want to jump in front of the NVIDIA train going into the end of the year. We talked about window dressing. A lot of money managers probably wanted to have NVIDIA, AMD, these runners, technology runners on their books at the end of the year. Now we're going into January. My hypothesis is that they're going to take their profits. Again, another factor is they probably didn't want to pay the taxes in 2023. Now we're in 2024. I wouldn't be surprised to see them take their profits, book the taxes for 2024, and then rotate into things that have more potential upside. Again, we talked about the laggards to leaders theme and the January effect yesterday in part 1, so you can listen to more of my thesis in those regards in part 1. Again, we're going to watch SOXL. Rejection off a top or resistance in SOXL to determine our entry in SOXS, and we did a previous more detailed video on that theme that you can listen to via the link in our notes and also on our BeachBum Trading YouTube channel. Talked about USOI, and we looked at that already. Good morning, Flip of the Shippa, MD. Thank you all for joining us. Hope you all are doing well. A couple other quick updates about our watch lists, and then we'll go jump both into our watch list Google sheet and also the charts in Weeble. If you would like more frequent updates to our watch list, including price targets, dividend information, earnings report dates, ex-dividend dates, dividend yield, optionality information, in the past, we have used an automatically generated web page that's available for any level of our Patreons. So if you would like more frequent updates to our watch list, we regenerate it daily, automatically. And now we're moving to our watch list Google sheet. So we're going to be retiring that web page and moving only to our watch list Google sheet, which we introduced probably last week or so. And we have this new updated watch list Google Sheet, and I'll open that up and then we'll talk about that briefly. So this includes all of the information that used to be on the web page, as well as some additional information. And I'll show you some of the enhancements that I've made to the watch list Google Sheet. And again, if you would like 24/7 access to this watch list Google Sheet and all the sheets in it, you can get access to that via any low level of our Patreon. So a couple enhancements I've made this week to that is I copied the sectors and screener sheets from our ETF Google Sheet also into our watch list Google Sheet. So kind of a one-stop shop where I can watch the market during the day. I can see sector rotation in the sectors tab. I can, look at the technology components via our screener in the screeners tab. We also have the screeners for finding cheap value and cheap profitable stocks that we've reviewed yesterday. So again, you can see more about that yesterday. I also added conditional formatting to the color of the symbol so that the symbol now shows green if the current price is within 10% of the support price and the risk reward profile is currently greater than 2. Which is my criteria for, okay, if it's within 10%, I really want to pay attention to that, and it's got the risk-reward profile that we like. So we'd love your feedback as to what else, what other enhancements you would like to see in these Google Sheets. So I'll quickly show you those. So here's our main watch list, our top swing trading stocks to watch list and watch list 1 sheet. So you can see the listing of the stocks in our watch list. We've got the company name. The white columns are based on Google Finance functions. So they're near real time, about a 20-minute delay. You could see, which ones are going up or down, going down if they're in red, going up if they're in green. Our support and resistance are our buy at and sell at levels. So then the risk and reward are based on the current price relative to the buy at or sell at price. And then the risk reward ratio is calculated based on those risk reward numbers. You can see the 52-week low and high, and also the 52-week risk reward profile. There's a quick link to their FinBiz profile, so you can very quickly jump over to FinBiz, see their current chart. We've got their earnings, the next earnings date if we know that, their dividend amount, the next ex-dividend date, dividend yield, the optionality information, and then any further notes that I might put and output regarding a particular symbol. And again, now you can see the highlighting if the stock is within 10% of its support level. So if the current price is within 10% of the buy at price, then and the risk reward profile is greater than 2, then it shows up. So we see the only one not currently fitting that criteria is SOXS. And again, the SOXS entry would be based on the top in SOXL. So again, the other enhancements that I made, I added the sectors tab, same sectors tab that we have in our ETF Google Sheet. Again, just a quick place that I can jump over, see the sector rotation. Okay, I can see we're getting a rotation, out of technology into healthcare, into consumer staples, and that may help me determine which of my stocks in my watch list I might want to pursue at a given time. Also added the screeners tab, so again I can quickly access the technology components breakdown in FinBiz, so I could see that rejection, that we saw on Friday for like ARK and SOXL and some of the components of the technology sector. So again, we hope that all helps. Let me know what do you think of those enhancements? What further enhancements would you all like to see in our watch list Google Sheets? And again, please see that watch list Google Sheets in the future for our watch list. Just another quick note, I will still post to the Stocks Watchlist channel, which also our Patreon members have access to this channel. So if I make any updates to our watch list, any of our watch lists after that Google Sheet has been automatically updated at the end of the day, then I would post those updates to the Stock Watch List channel, again, which our Patreons have access to. Okay, so let me grab a quick drink and we'll look at those charts in Weeble. Just a quick reminder, if you're not already using Weeble, Weeble is still offering up to 75 free fractional shares if you open and fund an account with 25K or more. If you fund it with less than 25K, you can get up to 30 free fractional shares, and each of those fractional shares can be worth from $3,000 to $3,000. Again, we use Weeble for our market analysis, our due diligence, the majority of our trading. And if you would use our affiliate link in the description box below, we would appreciate it. And you'll also help support our BeachBum trading community, which we also greatly appreciate. I'm using the online browser version of Weeble. Another nice feature is you can have all kinds of different watch lists. So I've got our trades, I've got our top swing trading stocks to watch lists. It's easy to quick and easily jump between these. So, and then I can go through the charts very quickly. Again, SARK is the short on ARK-K. So you can see it bounce back up when ARK-K got rejected. Looks like it just got bounced out again. Okay, so we see, ARK has made a recent high again, new all-time high, and then got rejected pretty severely on Friday. So we're looking for that kind of a rejection. Again, if you already caught that downtrend in ARK-K and jumped on SARK, again, you can ride that momentum down. Still plenty of upside. We talked about this yesterday. Plenty of upside in SARK. Land, again, the REIT on farmland, we would like it down, below 14. You can see it kind of peaked out and rolled over. So if it downtrends, the lows down in the low 13s, we'll see how far that downtrend goes. Again, they pay a small dividend, about 5 cents. So really it's the price appreciation that's more attractive in land. SIJ, again, is the short on the XLI. So you see XLI made a new high. So again, we're looking for a rejection off of that new high or that resistance to jump into SIJ, which again is the short on the XLI. Easy Mike wants to see a 5-year chart on ARK-K. So yeah, we could see, back in 2021, the real exuberance, ARK-K was up at 159. We can also see that pivot point there, so we can see where that resistance level is that it's currently getting rejected from. So good point, Easy Mike, is, ARK-K has plenty of upside if we get that, extreme exuberance that we saw in 2021 in ARK-K. So again, good point, and be careful. Similarly with, well, here's the long-term chart on SOXL. So again, SOXL in the past, it's been much higher in 2021. But recently, if we look at the more recent chart, we could see it, recently made a new 52-week high, got rejected, rolled over. And that's when we would use SOXS again to short semiconductors. Again, as we talked yesterday, all the technology components have had, other than biotech, although it did have an exuberant run, they've all had a pretty exuberant run in 2023. So I wouldn't be surprised to see profit taking in the technology sector and a rotation into other beaten down sectors from 2023. Again, USOI, oil, if it breaks down below 70, we would look for another long in USOI. Okay, so now we'll look at our bullpen stocks. If you're new to our community, the concept of the bullpen stocks are not generally ones that I'm watching real time. They're ones I've identified that they may have an attractive setup in the near future. So I typically look at them at the end of the day. If their setup has improved, like we did with SIJ, we then put them in the game, move them up to our main watch list, our top swing trading stocks to watch list. If they break down or run away, then we just take them out of the bullpen. They're still in our database, and we can revisit them in the future. So right now in our bullpen, we only have a couple. We've had CPSH for a while. Again, this is a beaten down electronic components company. Again, I was kind of waiting since it was down so much for 2023. I wasn't overly eager to jump in, given the risk of tax loss harvesting in 2023. Now we're past that period, and CPSH may be one that people see as an opportunity since it was so beaten down, with potential upside. Seems to be holding up pretty well. You can hear more about our due diligence on CPSH via the bonus link into our quick take due diligence video via the link in the notes. We talked yesterday and we looked at that rejection and not too long ago where gold hit a new all-time high, got rejected pretty drastically, and so we've been watching gold and looking for another similar rejection from an all-time high, and if so, we might short gold using GDXD. Now, since then, gold tested 2100, got rejected. So if you're a short-term trader, you can short gold with GDXD, long with GDXU. If we see again a retest of that 2100 high and a rejection, then short-term trade short on gold. I think the long-term trend is still up. So we'll look at those charts real quickly in Weeble. So again, I could just flip at the end of the day. I could just flip to my bullpen watch list. Here's CPSH. So again, you see it's choppy. It's a low float, small cap company. Looks pretty stable bottom. So again, this may be attractive at this point. See, it's down considerably for the year. So if it does start to swing back up, we could take a swing at CPSH now. Again, I would use GDXU as the determinant, a rejection from resistance like we recently saw, in GDXU as the entry point in GDXD. Again, GDXU lags gold, so even though gold hit a recent new high, we could see GDXU, was higher in the past, so there's some deterioration in this leveraged ETF. So again, I watch the spot gold price to determine entry points in GDXD. So you see it bottomed and turned back up recently when gold got rejected off of that all-time high. Easy Mike says long gold miners. Yeah, we looked at some of the minor. We've got minor ETFs. We've talked about some of the small miners recently and identified a number of opportunities. A number of these small miners have been grinding up very nicely recently. So you can go back and take a look at, we looked at AU, we looked at Sand. I also have a handful of other small, unprofitable where they're currently unprofitable small gold and silver miners, and they've all been grinding up lately, which is nice. You can also look at the JNUG ETF we have in our ETF Google Sheet. There's also, we've talked about GDXD, which is another ETF on gold miners. So you can look at all those again in our ETF Google Sheet, and we have a video. We talked about the gold and silver ETFs as well. An honorable mention that came up in in my screening for stocks that I wanted to take a quick look at is BRID, Bridgeford Foods. So it's a consumer defensive packaged food. So again, if we see, which we saw on Friday, was somewhat of a rotation into consumer defensives. So then BRID is one that I've identified in the past. It's in our database and it popped up. Not one I'm particularly pursuing, but it might be something that you want to play that sector rotation into consumer defensives on. So we'll jump over to FinBiz and then also quickly look at their chart in ChartMill. So just a reminder, you can also find links to FinBiz and all of the tools and resources we frequently use on our homepage in the link section of our homepage, which is beachbumtrading.com, but without the U. So if I go down to tools and resources, again, we've got links to ChartMill, FinBiz. BRID. So again, Bridgeford Foods. See, it popped up in my screeners. It was, recently bottomed, swung back up. See, it's got a 52-week range of only 10 to 14. See, they appear to be profitable. It is not optionable. It's also very low float. You can see, and there's some discrepancy between the shares float and shares outstanding. So I don't know if they have an offering sitting there. Again, very low float, very illiquid. Average volume's only 2K. So again, these are some of the reasons I'm not pursuing this, is I have difficulty trading those choppy, low flow to liquid stocks. If that's something that you're more nimble at, more attractive, but we can see very long term. BRID was up in the 20s in 21. So again, 20 and 21. So again, we see, the pandemic lockdown, they skyrocketed, up in the high 30s back in 21, popped up in the, low 20s. So it's got, plenty of potential upside. You can see it's kind of basing. So possibly swinging back up. We look at their financials a bit. So the EBITDA positive now recently, EPS positive recently. Look at the quarterly. So again, EBITDA is positive. EPS again, it's been positive low. Looks like it might have bottomed and turned up. So that doesn't look too bad. So they distribute frozen and snack food products. So again, you can see why they benefited from the lockdown. Everyone, was home buying frozen foods and snack products, sandwiches, etc. They've been around for a long time, since 1932. So again, it's a staple. It's a consumer defensive. So if we again see a rotation more towards defensive sector, this may be one that you find attractive to play that sector rotation, and also one that's profitable. So I also want to look at their chart very quickly in ChartMill. Look at their health, their setup. So we can see right now their technical setup's not very good. Setup rating is only 1 out of 5 technical, 2 out of 5 in general. See, the growth isn't great. Profitability is average. Health is pretty good, so a little above average. Valuation's a little low. So I wanted to look at their fundamentals. So they get a 5 out of 10. Has excellent financial health, some minor concerns on profitability, quite expensive. So again, we see health very positive. Valuation's a little low. Growth's a little low. Profitability's average. So again, you can dig more into the details in each of these sectors in their chart mill profile. We see the technical analysis setup is pretty poor right now. So again, it might be one, if again you want to look for somebody to trade on a rotation into consumer defensives in the packaged food sector industry, you might want to consider BRID. So again, not one we're going to pursue, but I wanted to share that with you if that's something that might fit in your shopping list, etc. So I hope that helps. Okay, since we're talking kind of about shopping list stocks, again, the concept of the shopping list is we always recommend you have your shopping list ready of stocks that you want to buy, be it for a long-term hold or just a long-term swing. Have it ready if we get a downturn in the markets, get a irrational reaction to earnings, or just a sector rotation that's a little irrational. Have your list ready of stocks that you want to buy at that time. My standard caveat is, avoid zombie stocks, zombie companies, zombie ETFs. Now, again, with the January effect and now coming out of the tax loss harvesting season, we've seen some of what some people are calling, the dash for trash. They're taking, anything that's been severely beaten down, making the assumption that those are going to outperform going forward. So they've been jumping on some of these stocks, be they be severely unprofitable tech stocks. There was quite a run on. Now we've seen some small caps as well. Again, some of these are very unprofitable, so not ones you want to get stuck with, but short-term trading, day trading, scalping, etc. You may be able to make some money trading some of those runners. And again, this is all part of the January effect, and we talked about the rotation from laggards to leaders, leaders to laggards yesterday. So there are probably going to be plenty of those types of opportunities early next week. When we come back and people are looking for outperformers, we'll probably see some runs in a number of those small caps. So again, yesterday we talked about how to identify cheap value and cheap profitable stocks. And again, my personal recommendation, not financial advice. We're not financial advisors. None of our content should be considered financial advice. It's all for education and entertainment purposes only. But again, I wouldn't want to get stuck with big losers, so I would stick with profitable stocks, value stocks, like we showed you in the screeners yesterday. And also I pointed out that we've added that screeners to our watch list Google Sheet as well. So yesterday we went into a little bit more detail on some of these screeners, and we've got several videos referenced in the notes from yesterday about how to find cheap value stocks, how to find cheap profitable stocks. So again, various ways you can use these screeners to build your shopping list, and again, not get stuck with zombies or poor companies. So I hope that all helps. Okay. Let me grab a quick drink and we will look at our Dividend Payers Google Sheet. I have a number of, I think, exciting enhancements to our Dividend Payers Google Sheet that I want to review. And then if anyone has particular dividend payers they want to look at, we can do that as well. Okay, so I've made some enhancements to our Dividend Payers Google Sheet in the past. I noticed that some of these that are displaying a very high yield, um, have poor performance. So their price performance over the past year may have been very poor, and yet they're showing, a very high yield. So how do we know? How do we compare them relative to their recent performance so that we get a better feel for, okay, what can we expect from price appreciation? Also, we talked about some deterioration in particularly some of these leveraged ETFs, and how do we not get stuck in somewhere we're going to get a deterioration in price that may wipe out the dividend yield, or again make them less attractive due to deterioration in price versus the dividend yield that they're paying out, because again we want to be net positive and obviously as high as possible. So what I thought and what I've done is added the performance for the year from their FinBiz profile. So I'm just going to take an example. Let's just take USOI as an example of a dividend payer. So if we look at their FinBiz profile and I look at the performance for the year, it's minus 14.94%. They're paying a dividend yield of 26.72%. So this is the dividend yield that most people are looking at and saying, oh, I'm going to make, 27%, but I'm going to lose, or at least past year, I lost 15% on their price appreciation, price depreciation. So my net is the difference between that dividend yield and that price performance. So what I've done is, again, added that performance for the year from the FinBiz profile, as we'll see in this performance year column Y. And then I added a column called net yield, which in the main sheet is column G, which is adding those two together. So again, as we saw in USOI, if it's positive 26 minus 15, I get a net of about 11%, which is still good. So, that way I can compare dividend payers to each other more equitably. That also takes into account any depreciation in price or appreciation in price when I'm looking and comparing their yields. And also, we're looking for something 5% or better. I can still get 5% in my money market account in my brokerage. I get 4% in bonds. So, I'm not terribly interested in anything below 5%. So a question to the community. I'd love your feedback, in the comments to the video and our Discord, etc. I could color those net yield cells red if it's below 5%, like we've done for the yield percentage, if their adjusted yield is below 5%. So let me know if you would like that. Similarly, on the ad sheet, as we'll see when we look at a couple of the additions, I put that same performance, yearly performance in column Y. That sheet's a little bit different. So the net yield, it's in column G again, but I'm taking the dividend percentage in column D, adding that to the performance of the year. Those have to be manually entered, but again, it will automatically calculate that net yield. So I want to show you those first, and then we'll look at some additions. So hopefully that's not too small. I just want to be able to show the performance yield column. So again, the ones in gray are automatically updated at the end of the day from our automated systems and our databases. So I'm collecting that data from the FinBiz profile and inputting it into column Y. I didn't think that was necessary for you to see necessarily in a short screen. And then the net yield is, again, the yield percentage. So the main percentage that's shown on the profile. So if we go to USOI, our example, so again, the yield shown, the yield percentage at the time I got that data was 26.03. We could see the performance, negative 14.7. So we come up with a net yield of 11.3. So again, still attractive, but it's, significantly less than 26%. So again, I wanted a better way to compare the yields, the actual net yield, taking into account their performance in terms of price appreciation, as well as their dividend payment over the year, and then be able to select ones that, are likely to have a yield, including that price appreciation that's attractive. You can see some of these, are negative because they've depreciated in price significantly more than what they're paying in yield. So hopefully that will help you select dividend payers that, again, fit your risk-reward profile, your income requirements, etc., which is why we built this dividend payers Google Sheet to help you and us be able to select dividend payers that, again, meet our income desires, meet our risk-reward profile that we're looking for, and also be able to build a schedule of dividend payers that meets our income desires. So let me know what you think of all this. If you'd like further enhancements, changes, etc., you can see I've moved the optionality column over a little bit so that if you, zoom in a little bit, you can still see the industry, etc. So again, I'd love your feedback on these enhancements or any other further enhancements you'd like to see in our Dividend Payers Google Sheet. And again, as a reminder, you can get 24/7 access to this Dividend Payers Google Sheet, as well as our ETFs and our options, our put ROIC Google Sheet, by joining our Patreon at the all access or VIP levels. So a couple others that I want to specifically look at today is Easy Mike had commented in a live chat of last week's part 2 that he was looking at a couple other SPY dividend payers, SPY D and SPY V. So I wanted to look at those. So I plug those into the ad sheet of our dividend payers, and I want to take a look at those. So I'll do that first. So again, you can see I added those performance columns and the net yield columns to the ad sheet as well. So now we can also use that on the ad sheet. So here's the SPY D and SPY V. So SPY D is S&P high yield, high dividend ETF. SPY V is the portfolio S&P value ETF. So you can see I've captured the dividend information maybe off their, FinBiz profile. So you can, pop to their FinBiz profile quick and easy via the link in the notes. So if we look at SPY D, so here's a 500 S&P high dividend ETF. See it pays, 4.7. It's optionable. Price performance though is minus about, minus 0.08, so it's price depreciated slightly this year. See, even though it looks like it bounced mostly this year, it's trending back up, so possibly the price may perform better in next year. We look at the definition of that one. It says it seeks to track the performance of the S&P High Yield Dividend Index, 80% securities of the index, high dividend yielding companies within the S&P index. So if we compare that to SPY V, so SPY V is the S&P value ETF. So you see it's been performing a little bit better. It's got only a 1.8% dividend. It is optionable. You see, though, its performance for the year is a positive 21.56, so it's performed positively for the year. So we see that uptrend. Looks like it, broke a new yearly high. Looks like it's at an all-time high. See, it's 6 total return performance of the S&P Value Index, large cap exchange traded equities, value characteristics. So large cap of the value sector of the U.S. equity market. So those are two additional dividend payers, ETFs, that you might consider relative to the SPY. If we look at their risk-reward profiles, risk-reward in terms of price appreciation isn't really significant until we get to like a bottom to top. In that case, SPY-V still has a little bit better. 52-week SPY-D has a little more, reward potential since it's down a bit. So if we look at that net yield, though, you see SPY-D, once we take into account that negative of their price performance, it's only 4.6, so it's not even 5%, whereas SPY-V is 23%. Because of that price appreciation. Now, if you don't think it can continue to outperform going into 24, then you might want to discount that performance, and you can again see the risk-reward profile potential there. Now, if we compare that to just SPY, so here's just SPY. SPY only pays 1.39. So I probably don't have the performance plugged in. So let's look at just SPY. So again, here's how you can do this on the ad sheet as well. I can take so it's 26% for the year. I go ahead and plug that number in. And now we get a net performance in the SPY of 27% compared to 23 for SPY-V. So the basic SPY has outperformed once we take into account the price appreciation. Now again, if you don't think SPY will outperform in terms of price over the coming year, then again, it only pays a 1.3% nominal yield. So again, hopefully this all will help you, give you more information, more to consider in terms of what types of dividend payers do you want? Do you believe it will continue to outperform, and therefore give you that higher net yield? Or is that price performance going to deteriorate and you're going to just, have their nominal yield? So I hope that helps. So the other one I wanted to look at today is Born to Be Free, mentioned AM and AMTO Midstream Corp. So I plugged that one also into our ad sheet, and we can look at it in FinBiz as well. So here's AM and AMTO Midstream. We'll look at it in FinBiz. See an oil and gas midstream company. You can see it's pretty high, run up quite a bit with appreciation in oil pipelines. So you see again pretty high. It does have some potential in the future. It's been as high as 22 or so. You see it's got a nominal dividend of 7.2%. It is optionable. See its performance is positive 7.1% for the year. So if we look at those performance, so I plugged that one in already. So we've got a yield of 7%, net yield of 24%. See, it pays 23 cents quarterly. So, but in terms of risk reward, not a whole lot. 1.4 for the year. Again, longer term does have some upside. So if you think it's going to continue to trend up, It's got a nominal yield of 7%, so you can collect 7%, which isn't bad. If the price is going to continue to appreciate, it could be as high as 24%. But again, the risk reward profile isn't all that attractive right now in terms of near-term resistance. So again, not one I would be pursuing right now, but I wanted to do that analysis. And again, you can consider that if you think midstream oil and gas is a sector that's going to continue to outperform going forward. Again, you can collect the 7% nominal yield, not bad, better than 5%. So I hope that all helps. Okay, so if you would like us to look at any other dividend payers, I'll quickly check the chat, see if I missed anything. If I did miss your ticker or something you want to look at, please throw that in the chat. You can always ask us to do this kind of research by posting a comment to the videos. You can always contact us in our Discord. Again, our Discord's free to join. And you have access to all the channels with the exception of the few I pointed out that are exclusive to our Patreons. We have a series of videos, how we've developed this Dividend Payers Google Sheet, how you can use it to find the best dividend paying stocks that meet your income requirements and schedule. And you can access that series via the link in our notes, or also find them on our YouTube channel. Okay. Again, if I missed your ticker in the chat and you want to look at a dividend payer, I'll keep that up for a few minutes. Just quickly want to go over our options strategies, look at our puts ROIC. Again, we have a couple option strategies we use, selling covered calls on our existing positions, sell them when they're going up, buy them back when they're coming down, sell puts, in our case, cash secured puts on stocks going down, buy them back when they're going up. And we use this puts ROIC Google Sheet to help us identify possible opportunities to sell puts. So, and again, you can get access to this puts ROIC Google Sheet also by joining our Patreon at the All Access or VIP levels. Again, this is automatically updated at the end of each day. And I just wanted to go over a quick addition. I added American Airlines at the 1050 strike. Right now, our expirations we're looking at in general is still January. We'll roll that when the 40-day window rolls forward. Again, with the VIX having been as low as it is, premiums still aren't terribly attractive. So as you'll see, there aren't a whole lot of opportunities that meet our criteria for pursuing selling cash secured puts at this time. And we have a whole series on how we use this puts ROIC Google Sheet to find opportunities to sell and buy back puts. You can access that series via the link in our notes. We also have a playlist of various other videos on how you can make money trading options in our options playlist. So I'll quickly jump over and we'll just look at American Airlines. We'll see there aren't a whole lot of attractive opportunities right now. So you can see I added American Airlines at 1050. Again, by adding it into our systems, our automated systems will go and collect the options data, fill it in the Google Sheet. So then I can see if that's something that we want to consider further. Again, premiums are very low. So there isn't really anything right now as of Friday showing with any significant premium. So we, the ones in red are ones that were going down. But again, so Dollar General, Moderna, Microsoft, but again, they're quite a bit above my current strike price, and premiums again are just not very attractive. So our main watch list. Again, these are the ones that I've identified that may have better potential going forward, but again, nothing is really showing with a great premium in general. Green is they were going down, so I might want to look at selling puts. Red would be going up. See Disney's coming down a little bit, but again, the premiums just are not very attractive right now. So we keep an eye on it, but not a strategy I'm spending a lot of time on right now. Okay. Recently, we also released this additional alerts channel. So my automated systems post real-time alerts of stocks going up, stocks breaking out, stocks near their buy price. And if you would like access to that information, if it would help you see sector rotation, see opportunity. Here we can see on Friday, we can see XLV was breaking out. We see utilities was moving up. So again, these are all things that can help you identify sector rotations, identify opportunities, and you can get access to that channel by joining our Patreon at the all access or VIP level. And in the future, I'll talk more about that. You can get more information. We've released our first video via the bonus link in the notes on how to get alerted when stocks are moving out, breaking out. So I went over to the initial information in that video, so you can all access that now via the bonus link. Easy Mike is talking about the water ETF. Just very quickly, let me show that. So in our ETF Google Sheet, we already have one ETF for water. I was looking at it recently. So again, you can use our ETF Google Sheet. Here's water, PHO. So you can see right now it's at 60. So risk reward isn't too bad. Got some room. So if that's one that you're interested in, again, it's a little significantly above the support level, but the risk reward profile isn't bad. If you guys know of another water ETF or you want me to look at another water ETF, let me know and we can take a look at that. Okay, so ran a little bit long already. I did eventually want to come back and further talk about how to trade biotechs. So I'm keeping that question that Carmen had, and we'll probably use this BIVI as a case study on how to trade biotechs. We will be releasing that first video, but last week you can see my first discussion on how to trade biotechs. And again, I hope to be able to come back to that topic and talk more about how to trade biotechs in the near future. But in the meantime, if you have any other questions, any other stocks you want us to look at, post those in the comments to this video. Again, you can contact us in our Discord. Just tag us in the Discord. I'd love to have questions, ahead of time prior to these videos so I can do the analysis, the research, etc. in advance. You can also find links to all of our social media sites under the links on our homepage, beachbumtrading.com. You can find a free invite to our Discord, as well as, again, links to all our social media sites. You can always contact us, DM us via our Discord or any of our social media sites. We'd love to hear your feedback on, what can we do in 2024 to improve our weekly trading game plans, our other videos, our tools, our community, all our Google Sheets. So let us know what would you like us to see improve in 2024 to help you make money trading, help you succeed in your trading career. We hope you like this content. We hope you'll share this. We appreciate everyone that's helped us grow the community in the past couple years, and we hope you will continue to share our content, invite more traders. Let's continue to build our community for the mutual benefit of all of our BeachBum traders. And in the meantime, we want to wish you all a very happy New Year's, very happy and safe New Year's Eve, happy New Year's Day, and a great first trading week of 2024. And we will see you all on the trade floor on Tuesday. And we hope to see you back here next week for next week's weekly trading game plan. So thank you all for participating today and over the year and watching our videos. Again, we hope you please smash the like button. Please share our content. If you're not already subscribed, we hope you will choose to subscribe to our BeachBum Trading channel. And again, we appreciate all your help and support and participation in 2023. And we look forward to working together with you to help you make more money trading, help you succeed in your trading career in 2024. Thank you again. Happy New Year.